All right, Bulls and Bears, welcome back. We're here with another dose of economic reality. Full to the bust, BX Foil. Let's go ahead and get into the financial economic news and an update today. And everything's playing out pretty close to what we talked about. We saw this big sell off in the stock market, Monday, August 5th. And we said this is very likely going to be the beginning of a downturn. Now, let's take a look at some of the indices here, starting with the Dow Jones, just to kind of see what I'm talking about here. We came in at 39,446 at the close here. And here's a 1 year chart. Up until now, every sell off, here's back in October, November, we saw it recover, right? Sell off, recover. And not just recover, but actually go on to go even higher. New highs, new highs. Sell off what last May, went on to new highs. Sell off here recently, August 5th. Will this be the turning point, or will it just go? Will we just go to new all-time highs? Does anybody know? I'd have to say that, and I'm not in the business of calling tops and bottoms and market turns, but if I had to put money on, I would bet against it. And I'm not telling anybody to go ahead and invest based on what I'm saying here, but I think there's just too many things going on right now, and I think the top 10% that really run these markets, that control these markets, that own most of the stocks, they are starting to get spooked. They're starting to get spooked. S&P 500, same thing. This is a 1 year chart. Go back to October, sell off, recovery, new highs. Sell off in April, May, recovery, new highs. Big sell off, and it wasn't just August 5th. It actually, if you look back mid July, we started seeing a big downturn. And it's a pretty big one when we look back over the past year. One of the biggest ones in the past year. Look at a 5 year chart. Pretty big. 2022 had a big sell off. 2020, of course, had a big sell off. So we'll see. Either way, we're making some pretty good money by investing against some of the stocks that were overbought. And I did close out a couple of my put options. I had five of each of these stocks, and I closed out of two of them, or closed out two of the five of both of them. Anyways, we'll talk about that later on here. Let's go ahead and get into some other news here, because there's a few things out here that I want to focus on today. Let's look at the CPI number, Consumer Price Index, and we know this excludes a lot of things that people have to pay for. Let me bring up a bigger chart though this time. Consumer Price Index, folks. Let's go back to 2020. We actually saw the cost of living come down, the onset of the health crisis. What, from looks like February, it's kind of the peak, and we bottomed out in April, and then May we started going back up again, right? So it was a very brief period of deflation, and we all know what happened after that. The helicopter money, the checks, the cancellation of all the rents and mortgage and foreclosures, and created massive price inflation. Now let's go back even further. Let's go back to a maximum chart. 2000, let's see here, 8 financial crisis. A very brief dip, even more brief than the one we saw in 2020. Maybe about the same. Either way, the point is we see deflation at the onset of an economic crisis, an economic downturn. So let's fast forward to today, right now. What are we seeing here recently? CPI is starting to flatten out. People are getting maxed out in their credit cards. People are having a harder time qualifying for loans. People, even if they're not maxed out, they're starting to get very concerned at their own financial situation and their inability to keep up with these costs, these payments, and delinquencies are rising, right? So people are starting to see the writing on the wall, and this is another sign that we may be headed into something pretty severe. Not next year, not 6 months. I'm talking in the next few months before the end of the year, right? Could just be me, but this is the way I'm reading the chart. What do you think about this here when we start to see the price index stall out? And we know this is completely manipulated and cherry-picked data. It's much worse than this, meaning prices are probably still going up a lot more. I would say they're definitely going up a lot more than the chart represents. But if you just go off of the same chart, looking back, 2000, financial crisis, 2008, we start to see a slowdown in prices as we enter a slash economic downturn slash recession. So something to think about. Please let me know what you think about that one down in comments. Let's move on here to some other news that's really telling to what's going on here, current environment here, the current economic situation. Eggs, gasoline, and car insurance, where inflation has hit Americans the hardest. If they would add everything up that we have to pay for, or that most people pay for, you'd see the numbers much, much worse than is being reported. Let's go over to the housing market real quick. Mortgage rates plunge. We told you this was going to happen. They're trying to make up for the stock market volatility with keeping this housing bubble inflated. Mortgage rates down to about 6.5, the lowest in over a year. Also, home prices recently have fallen. Not a lot, but it's the biggest price drop in 2 years. Now, right now, it's just a month-over-month price drop, not anything to scream from the rooftops, but it is interesting because we haven't seen a price drop like this in a couple years. Another sign that could buyers be starting to get skittish? Well, definitely consumers are, but even the big money, the investors, the corporations, they're starting to pull back too. Foreign investors, foreign investment in properties and real estate has dropped off somewhat. So, nothing huge, no major red flag, but everything taken together, I think we can all kind of see the connection here, and put two and two together, we can kind of see the direction here. We're seeing a big slowdown, not just happening, but it's going to continue to decelerate too here. But what could happen? They could come in with monster money printing. They could send out more checks. They could put a cancellation on rents and mortgages. What's that going to do? Is that going to stop anything? No, it's going to make inflation stay high and go higher. And that's going to be just, at the end of the day, it's going to be even worse. Even though they're trying to help, a lot of these programs just make things worse. It's like giving more drugs to the drug addict. They'll feel better for a brief time, but then when it does come time to wean off of these drugs or go cold turkey, it's going to be even harder at that time. And the most painful thing that could happen is this cold turkey type of exit from this monetary madness. And that would be some sort of event or situation that drops everything. I'm talking about a compromised system, a hack, an attack on the grid, and many people have been warning about that. Here's another snapshot here of a recent headline. Another recession signal. Credit card spending is slowing, even though banks aren't tightening. Right, most banks aren't. It's only about 20% of banks are tightening right now. Even with that, people are still slowing their spending. Now, part of it's because 1 in 5 credit card holders are maxed out. Right, they can do the balance transfer game and try to get a little more time, buy a little more time, but it's getting harder and harder. And we're seeing an overall slowdown. We see it in the layoffs. We see it all over the place every time we look at the data. Look at this headline here. Consumer Finance Protection Bureau. Credit card delinquencies are higher than in 2019 because lenders took on more risk. And I think the lenders were told to do that. They were told, hey, you're going to get bailed out. Just go ahead and loan out the money. Don't drop people's credit limits. We want the economy to look like it's growing. Of course, would it be any surprise to any of you if that actually was happening? If the credit card companies and the banks were told that they better keep the money flowing? I wouldn't be surprised at all. Consumers cut back on credit as debts and delinquencies rise. So people are starting to notice that, hey, even people that don't watch programs like this, they're starting to notice, wow, inflation may not be transitory. Everything is still expensive and getting more expensive, but they're telling us that inflation is cooling. It doesn't feel like it's cooling. It feels like it's getting hotter, but just not as quickly as it was before, right? People, I think, are starting to connect the dots here and figure out what's going on here. A couple other things to get into. I think we talked about this. 1 in 3 parents can't afford back-to-school shopping. Wow, time to start going to thrift stores or someplace that's a little bit cheaper, I guess. Disney seeing a slowdown. Lower income consumers are stressed, and this is quote, stressed and shaving off times at parks. So the amusement parks starting to see a slowdown in consumers, and it's lower income consumers. Of course, those are the ones that have been living paycheck to paycheck, and now they need to stay home and not go say hi to Mickey Mouse and Minnie and what are the other characters? I don't know. Disney characters. I've never been to Disney World or Disney. Is it Disneyland? So I couldn't even tell you if California is Disneyland or Disney World. That's how little I care about it. And I'm sure some of you will let me know down in the comments, but I don't really care because I don't go. Of course, my kids have asked me to go. Um, one of my kids is actually too old to go right now, I think, so I'm kind of glad of that. Um, you know, not that I'm a cheapskate, but I don't like to pay for things that are just so ridiculously overpriced, and I think most amusement parks are overpriced. I actually had a season pass to SeaWorld a couple years ago. That was worth it because it was unlimited visits. I think we went like 6 times in one year. That made it worth it, but the cost that I see people paying for theme parks, including Disney, insane, folks, insane. Even if I was a multimillionaire, and I'm not, but if I was, I still wouldn't like to give my money out to that type of so what I'm looking for, that type of greed, right? They don't need to charge this much for tickets. I like to reward businesses and companies that give good deals. Even though I can afford to buy something better or more expensive or go to more expensive stores, like I can shop at Ralph's instead of grocery outlet, wouldn't be much of a problem. But I like to give my money to the places that give the better deals. Grocery outlet, one of my favorite grocery stores. Kroger, not Kroger, sorry, Aldi, my other favorite grocery store. Right, not a huge selection, but pretty good prices. Anyway, hope everybody's good. Hope I didn't yak too much. What do you think about this? What do you think about that slowdown in CPI? Does it mean that we're headed into something right now that's going to be for the history books, like a 2008, like a 2020? And remember, if they come back with a response like we had in 2020 with all the money printing and all the forgiveness programs, cancellations, you're going to see inflation take off into the stratosphere, and it's going to be one of the biggest nightmares probably most people have lived through here in the U.S. So either way, it's not going to be easy, folks. Keep stacking, everybody, and we'll talk to everybody very soon. Bye for now. Peace.